Welcome back to another episode of my trading vlog. I'm going to be going over SPY, SPXU, and a little AMC and GameStop too. Of course, always keeping the meme stock people in mind. What this is, it's essentially an inversion of SPY. And in the past, I've done some other videos comparing SPY to SPXU, and generally it suggests that SPXU is oversold relative to SPY. That is to say, SPY tends to go through more exuberant rises than it really should be, and we can see that in the falling volume and the indicators on SPY. What I'm looking at currently now is very interesting. It seems that after breaking this longer term downtrend, SPXU rose from 1288 to about 1673. I was calling for a bullish reversal down here, and we definitely got it, finding ourselves in some sort of reverse leading diagonal triangle. That overlap between waves 1 and 4 occurring around 14 to 1433. As of late, we've seen a large ABC correction down, and I'm considering this to be corrective. And as long as we don't get below 1288, we can maintain that bullish stance. I'm calling this reverse leading diagonal triangle, wave A or wave 1. This is a corrective ABC move down, and we're beginning to watch the formation of a new impulse wave pushing higher, currently now challenging a downtrend that started to form on March 15th, and we've been following it today. We're just coming into contact with it. Zooming into the minute time frame, you're going to see that we have a stellar three-wave push coming right up to that downtrend, and now we're stalling out towards, well, I guess the day is over now, but towards the end of the session, we came right up to there and just hung out nice and cozy. You might be able to see that I have a position down here showing SPXU. I had 200 shares this morning. I sold 100 just to pocket some profit, letting 100 shares ride. This is how I'm shorting SPY, by going long in SPXU, which is a short ETF. I can go in more to this later, but this is how I'm doing that. I want to pull up a drawing set I had from earlier today. I was using again, a reverse leading diagonal triangle. This is the most annoying thing ever. This is not how I would prefer to analyze this, but there were some problems. And as soon as we have these weird overlaps in price where these gray boxes are, we can't put wave 4 there. So we might call this a complex double zigzag heading higher. Like, we could do that, but honestly, I think that the best way to look at it was in this reverse triangle. And the reason for that is because it would place wave E pushing beyond the lower extremity of this trend line, which it did, and we saw this big reversal come out. And yes, there's a lot going on with the FOMC and rates and all those things, and there's a lot of opinion about that. Really, I'm following the price here. Watch the price. The money moves, the price is around, and the money doesn't lie. Well, sometimes money lies. Sometimes people lie for money. At any rate, I'm thinking we could see a high of 1383 before we start to retrace. I really want to say this is impulse 1. This is a correction for 2 or B, and we're heading into C now. I'm just looking at this really quickly in the moment. I'm going to say that, yeah, we probably had some sort of diagonal through here as well. And this could be showing the top of that wave. It's true. 1, 2, 3, 4. We didn't get really 5 through here, right? So I'm gonna have to keep an eye on this and dig into that a little bit more. We can open SPY for just a moment as well. 410 is a large level of resistance. The price spiked above there before the session started and then just started crashing down. You're going to see a nice ABC down, a big push up, and then another swing lower. This is very erratic price action. This is not something I'm used to seeing. It's almost like we've got some sort of price mirror action through here and then an inversion. It's just weird stuff. SPY has been behaving irrationally. This is kind of my preferred wave count right now, following an ABC wave higher on the minute degree, finding ourselves in a right-angled broadening formation, following through there with another downtrend, which I have counted as a motive wave currently. I actually don't think I do. I think this is, let's see here, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, ABC, 1, 2, 3. There it is, A, B, C, and then I've got 5 through here. That's curious. So again, it's a little confusing. I guess we could have an irregular flat where wave A is motive, heads higher. Wave B is not motive, heads lower, sets a new low beyond the beginning of wave A. And then we have wave C come through strongly, pushing above the high of wave A. And so you get this really uncomfortable shape. It looks like this. It's very dumb. Some people don't acknowledge it as a real thing, but I say, how can you not recognize that? It has to be accounted for, and I think the only way to do it is say, yeah, irregular flats exist. This thing happens. And we have had this rally occur in diminishing volume. I've gone over this in the past. Diminishing volume, falling implied volatility. MACD is really not giving us any real indications or clues what's going on, but I think we can break this down to 5 waves, but we have way too much overlap back here between what would be waves 1 through 3. And so I'm saying this has to be A, B, C, D, and E. And when I do that, I can easily see that these trend line touches are formed with 3 waves between them. So I'm going to zoom in here and I'll just yeah, we have A, B, C. And then we have A, B, C. So you can see how those zigzags form between opposing trend line touches. When you have zigzags moving between opposing trend line touches in a broadening or a converging pattern like a triangle, we're probably signaling the top. We're probably signaling the top, the end of this corrective uptrend. At 410.55 level, holding again, proving to be resistance. It's very likely that we've had our third touch point along the upper trend line of this triangle, and now we're going to be looking for a spill downward. We're going to have to get above the high right here at somewhere near 412. We almost got there today on the intraday and then we failed. What this does is this lets us establish that this could be a beginning impulse heading lower, corrective wave B bouncing, and now we're heading down for C or wave 3. We could find a target near 399. It's going to be a really choppy ride until we get below 382, but as soon as we do, we'll be calling a double top on a larger time frame. Right now we got something of a double top over here. A similar structure over here as well. It seems to be that there's this heavy resistance through here, and the buyers are stepping out of the market, which to me is really exciting. Let's go to GLD next. Yes, GLD has been breaking out higher. I am supposing, though, that we've topped out and we're about to see a new wave down, so I'm going to zoom in here a little bit. It's kind of confusing. There's a lot of lines. This yellow dashed line, this is part of a channel. This green dashed line, this is an uptrend that was set by this high. You can see the price is now grinding along it. I'm supposing that this channeling through here, this is probably some sort of motive wave for wave A. We're now coming up through wave B, which is looking very awkward, and we'll be looking for wave C to push us lower. And yes, I'm bullish on gold, but yes, also it's going to go both directions, right? And we've been going up for quite a while. If we get a spill downward for wave C that exceeds the 100% target at 183.97, the target's going to be 181.45, which I think is fantastic because that would be a good entry. So today I closed out the rest of my gold positions, and I did that in order to get the cash going, getting ready to buy this dip. I'm looking at the MACD. I'm saying this blue line, the short-term average, is starting to come below that longer-term average. The histogram is shrinking. Implied volatility is not rising into this uptrend. And again, volume is decreasing. We talk about the RSI. We have the divergence. Now, I talk about divergences a lot because typically what happens is you see 1, 2, or 3 divergences appear and then a fourth. And what you're looking at is the tops of Elliott wave Elliott wave degrees below the degree that's driving the overall trend. And so you'll get that break of that bearish divergence in the RSI, and the price will set a new high, and that's the significant high of the higher degree that you really need to watch for. It's possible that we're actually in a very clean half-staff flag through here. Maybe I can get this going. Just take a look at this. It's very possible, we need to be aware of this, that we could have a flagpole forming from 3.8 to 3.17, and we'll just suppose that our breakout target is over here at 189 or 190. And if I do that, our price target is going to be 205. So we need to be very aware of that if this divergence in the RSI breaks, the next push could be really strong. And if so, then I'm going to be entering right here. For the time being, I'm happy taking profits and sitting out until we get above 187.98. I don't think we're going to get there, though. Then we're going to turn down first. Nonetheless, I am looking to enter, so I am just patiently waiting for GLD to come back down. AMC today was a spicy day last couple of days, right? I think we aren't feeling as strong today. Big red candle. That looks brutal. RSI starting to flex down just over that 50 level, which is so crucial to watch. And volume's decreasing, implied volatility is decreasing. MACD is still poising itself bullishly, and that's just because the close today was still above the last couple of closes, even though it was below yesterday's close. Still moving generally higher high and higher low. probably coming up towards that $6 target I've been talking about. But if you watched my in-depth video, you know that $2 is still on the table. So don't get too comfy. There may be more upside, but overall I'm expecting a spill in the near future. Looking at GameStop, this earnings flag is dragging out really long. I remember Nvidia did this too. So this flagpole forms wave A, the flag is wave B. I'm looking for wave C to push us up to that $32 level, test this downtrend. It hasn't happened yet, but GameStop's holding pretty well. I like to see that it's not following the markets a whole lot. Let's go look at Playboy too, because Playboy's been kind of low, which is fine. There was definitely an analysis here that said, yes, we come down as low as 158, and we got down to about 160. I have not been covering Playboy very well. I haven't just been buying this dip. What's my Playboy position currently? I've got 501 shares and a call. My cost basis is 179, currently sitting at 168. So yes, I am holding red, but I am not too worried about it. Even if it continues to fall lower, I'm just going to be simply holding. I think we're going to get a good bounce in the long run when earnings come next month. I don't know when that's going to be, but I expect that we're going to see some drastic improvement to the cash flow of the company, and that will bode well for the stock price. I think this company is undervalued. They've got a great new model, great new team, leading them into the future. So that's what I'm going to do for today. Just go over that. I am now holding SPXU long because I think SPY is about to make its turn down. And there's a lot of reasons for that. Primarily, inflation is not coming down. End of story. Oh yeah, inflation rises the slowest amount. Oh wow, that's so great. Wow, it's like if you were bleeding out, you know, you'd be like, oh man, I only lost, you know, half a liter of blood, which is like way less than yesterday. It's like you're still bleeding out. This is not like a good thing when you have inflation at 5%. Like that's still not great. And the longer inflation's too high is a big deal too, because remember, this is a compounding effect, right? It's 2% on 2% on 2% on 2%. Well, when you have 9% on 8% on 7% on 6% on 5%, if that drags out for a long time super high, then you know you're gonna have to raise rates even faster. Think of it this way: as drastically and aggressively as the Fed has been rising rates, it has not yet been effective enough to bring inflation down to the targets that the Fed is looking for. And as long as that is true, those rates will continue to rise. This will likely lead to a strength bounce in the dollar. We're gonna get a good push up, and I think that's going to push the metals down. Treasury yields are going to be all over the place because there's going to be a flight to safety that's going to drive yields down, but the Fed's going to be raising rates, it's going to push them back up. You're going to have all sorts of short positions going crazy. The bond market having been past its bull market, right? Now in this environment where flight to safety will be driving premiums up, but these yield rates going up will also be pushing it down. You can just see there's just no way to really cut it. You either have to be overly bullish or overly bearish. You have to inflect your bias because there's too many things going on at once. It's pure chaos. It's chaos. There will be so much confusion. People are going to go crazy. Remember, analyze, make a plan, follow the plan, and I'm planning on trading GLD and SPXU because those are the bear market flight to safety, and when the markets capitulate, that's where they're going to go, into the precious metals and into short positions, because I think the markets overall are overvalued still. That's what I have for today. Happy trading.